Good morning. It's Monday morning, and we're cleaning up last week and getting into this week. And if you look back to last week, really interesting day because we looked at the markets and the indications in the early side, on the pre-side of the markets. We were looking like the Dow was going to open up about 160 points. Early on, it looked like it was going to stay right around that 160 points. The NASDAQ was also looking pretty strong, up about 70 points. If you fast forward through the day, the Dow finished up 161 points. As a matter of fact, the explosive side definitely comes from the NASDAQ, and there's a lot of different reasons for that. We also had the talks early on. There was multiple different things going on. Obviously, stimulus, the big story of last week and continues to be this week, as folks have a lot more encouragement that potentially Pelosi's going to be able to work out something with Mnuchin, and there's going to be some sort of stimulus package. And that's something that the markets continue to play off and continue to kind of edge themselves a little bit higher. Nice performance last week. But the interesting aspect of how things really unfolded was the NASDAQ just started to make this run throughout the day and continued and finished up 160 points on the day, equal to the Dow, except for percentage-wise, a really nice move to the upside percentage-wise on the NASDAQ, up about 1.5%. So what was part of that? Well, really it was the semiconductors. Now, technology absolutely was participating, but you look at the semiconductor index, all-time highs again, and it wasn't too many weeks ago we were talking about how they'd taken a little bit of a breather. They'd taken off about 20 points off of the highs. Now we've established new highs, these all-time highs. Qualcomm, Texas Instruments, Lam Research, Applied Materials, obviously the news about Xilinx and AMD and that kind of a deal, and NXPI, Analog Devices, Teradyne, go through the list. Everything seemed to be working and pushing to the upside. A little bit of a breather for NVIDIA, but NVIDIA again today back up and definitely performing at a very strong level. Now, I did mention technology still did have some strength. I'm not saying they didn't, but it really did seem like chips were the real influencer when it came to Friday's markets. But the strength we had in the technology, no doubt about it. We had Apple, Microsoft, Google, Amazon, sort of the usuals, Netflix, Tesla, Salesforce, all participating to the upside. There was continued weakness, still is some continued weakness in energy. The major averages all down about 1% when you look over at energy. Industrials, the weekend, second half of the day, kind of had a little bit of movement. Financials, kind of quiet as we get a little bit closer to earnings season itself. The volatility index easing back down about 5% and trading right around 25. We had a really nice day in terms of volumes, though, and this was great. We had an unbelievable virtual conference last week. I'm excited for all of you that were able to attend that. We had, I think, somewhere close to 600 folks that were a part of that whole thing, and it was amazing. Some of the speakers were incredible. Not some, all of the speakers were incredible. Really proud of how things went over those 2 days. And I'll tell you what, I just go back and forth with which one was my favorite. And I'm not going to tell you because I don't think that would be the right thing to do. But there was some absolutely incredible talks and vision of what to expect going forward, what some sort of sectors might be some of those that are going to be moving to the upside. And I'll tell you what, incredible. Well, the other thing that was incredible was the volume that we had on Friday. 32.6 million contracts. Yep, we bounced back a little bit. We had slipped back down to about 25 million the day before, and bang, 32 plus million contracts again. Really active. Of course, the normal leadership. I'm not even going to break those down right now, but it's Apple and Tesla and some of the usuals that sort of mix into that top three, AMDs of the world and so forth. But the early indications today, look at those early indications. They sure did pan out on Friday in terms of the indications and actually where we closed in terms of the Dow. That was just absolutely amazing. I don't know that I've seen that before. So early on, looked like the Dow was going to be opening up about 60 points, NASDAQ about 210 points. Then as we got into the opening in the first 10, 15 minutes, started to shake things out a little bit. Dow started to move a little bit higher, up about 85 points. Now I just took a glance. Now we're up about 130 points. We're only less than 30 minutes into the trading session. NASDAQ was up about 155 early on. It's edged back a little bit. We talked about 210, then 155 when we got to the opening, and now looking at about 140. So kind of holding on to a big portion of what looked to be some of those gains in the pre-market. And as we talked about on Friday, maybe we'll see a little bit of follow through, something like that. If those numbers can double, that would be another extraordinary day. We'll see if that plays out. But what are people looking at right now? Well, they're looking at the stimulus package. They're also looking at earnings season and the kickoff of earnings season, and obviously the banks, and a lot of that really starts to get into the full mode of kicking it all off tomorrow. So that's something we're all going to be watching very closely. Also, Prime Day event. That's something that excites markets for sure. Online shopping. It's not just for Amazon, it's everybody because, of course, everybody wants to compete and they want to be involved in this online space where there's this special day and it's become its own holiday, so it seems. So all kinds of different things out there in terms of news. You've got Apple, obviously, the iPhone 12 launch and all the excitement based around that. So again, where are we? Well, volatility is about exactly where we closed on Friday. We pulled back a little bit. We were in the 25s. We hit 25. Here we are now, 25, 26. We're up a little bit of an edge higher there. So talk about the NASDAQ and some of the strength there. What are some of those names that are powering it right now? It's Amazon, it's Apple, it's Autodesk, it's JD. Now, JD, if you go back to last Thursday, we had 14,000 of the December 80 calls getting bought just last week. So again, just gives you some of that indication of what we are seeing on the unusual option side of things and how rapidly that really can start to kick in. As I mentioned, that was just last Thursday. And just the movement that's leading the NASDAQ right now. It's the absolute leaders, a really nice spike to the upside. Other names, you got Tesla, you got Zoom, you got Google, you got Microsoft, you got Salesforce, Twitter. Twitter continues to be one of these names that powers to the upside. We've had such great option paper in there for a long period of time. I just decided, hey, I'm going to turn this into one of my favorite stocks. We were talking about this last week on the cash flow portfolio. Me and Mikey Yamamoto and Chris Sikora probably going to be doing something, maybe potentially even adding that to that portfolio because they do have great implied volatilities there. So it turns into one of those kind of stocks where we see the continued buying to the upside. I chose, after being in the calls for a long period of time and trading in and out of those and rolling up and so forth, I actually moved on to this position of just having the stock itself and selling options against that as some of those implied volatilities have kicked in. Even though the VIX has come in, implied volatilities are starting to edge to the upside in specific names. And it's obviously, as you look for catalysts, earnings certainly could be one of those catalysts. Also, big days like in Apple, what we're talking about now in terms of this launch and so forth. Any of those kind of catalysts, oftentimes around those, you're going to see implied volatility start to rise and people starting to get a little bit antsy and all the rest of that. You can use that to your advantage. And that's why you need to get educated in the options world. It's why we do what we do. It's why we had such a great weekend last weekend. We talked about a lot of these various companies. A lot of the questions that were coming at John and myself was, how do you pick some of these stocks? What makes you more interested in this one versus this one? A lot of that comes down to risk reward and will the options allow us to be able to position in the way we would like to? So we got into a lot of depth about that and spreading when they're higher dollar amounts and so forth, and all kinds of different rules about where do you cut them on the wrong side, where do you start to trim on the upside. All of that is all part of the process that you have to learn over time. So what's the one area again that's dragging? Energy. Take a look over. Oil is hanging on to 40, but it's just kind of hanging on to 40. And yet you see some pressure there, both in the OIH and the XLE. So it's both on the beta side and some of those super names as well, the Chevrons and the Conocos and the Exxon Mobils. But I'll tell you what, the pressure's on, down 2% or more. Diamondback, Apache, Oxy, Concho, Hess, all those names down right now about 2%, as I say, or more. So a little bit of pain there. So let's get into a little bit of the unusual that stood out right out of the gate, because we are now 32 minutes into the trading day. We're up about 145 points on the Dow. NASDAQ up about 142 points. So percentage-wise, significantly different. Points-wise, almost identical. Matter of fact, the Dow up about 0.5%. You got the NASDAQ up about 1.25%. You got volatility just a little bit higher than where we closed this past Friday. So one of the names that I've gotten questions about time and time again over the last week and a half or so, ever since there's a secondary and some of the issues with the NFL and all the rest of this things going on, DraftKings. Well, DraftKings today, Oppenheimer came out and said, you know what, this is a compelling buy. On top of that, we saw some great option activity in there as well today, and we see a little bit of a turn starting there. Stock made an incredible meteoric run over the last couple of weeks, couple of months and everything else, but the stock got up over 62 and then it started this pullback, and the secondary and the pricing of the secondary, and people were a little frustrated about that, and the stock was coming in. Well, it looks like today maybe a little turnaround, and as a matter of fact, the options seem to think and indicate maybe there's even more than just a little bit of a turnaround. Stock was trading about 50-50 at the time. A buyer came in 2,700 of the October 23rd expiring, so these have a little bit of time. They don't go off, but October 23rd expiring, 55 calls. They traded anywhere from, call it $1.60 over $2. So let's call it about a $2 option. And to see that, this Oppenheimer price target went from 55 to 65. So this isn't a guy who's adjusting that around on the negative side. He's been wrong and all the rest of it. I like what we are seeing out of this sort of analysis that, okay, we've had this big pullback. We all understand why we've had this big pullback, and I'm going to raise my price target. That seems a little bit more common sense to me than oftentimes where we see some of these adjustments that we see oftentimes from analysts where you're just scratching your head going, hey man, you missed this ride one way or the other, and you're trying to make up for it. This is a guy who's been solid for a while and been correct, had that 55 price target on it. Stock did pull back, and now after this pullback, he's given this next leg up, saying a 65 price target is where he's at. So that's one of those ones where, we always look for in every single category, and not yet am I able to differentiate that for DraftKings, but I will say this. When you look at stocks, you want to look at the analysts who are right the most. Doesn't mean they're always going to be right, but those that are the most accurate. And that's why, and some people will fire away and say, well, I disagree with you that. That's fine. Everybody can have their opinion. You take a look at some of the numbers and all the rest of that. But it's why for, I don't know, the better part of the last more than a decade, talking about Katie Huberty and Apple and how well she has done. And there's different individuals in each and every one of these various names and sectors, but specifically in very specific names, where they've just been right more often than I think a lot of their competitors have been. And those are the people that we want to follow. Male, female, none of that matters, of course. You're just looking, who's been right? Who's been the most accurate? And then helps you make some of your decisions a little bit easier as you're trying to break down some of these stocks. Guys, the Market Rebellion is back. We are the best. We have the best in the business when it comes to the mentors. I can't tell you all the great positive feedback I got over the weekend from Bill's speech, all the different speakers that we had. It seemed like people really were able to grasp onto what they were talking about. They loved what they were hearing. And I'll tell you what, our educational side, I just love these guys and what they're doing. Have a great day of trading, folks, and we'll see you tomorrow. Tomorrow, I'll see you on this, The Take. We'll also see you on the Halftime Report.